there, money heroes. It's Stephanie, your host and fellow explorer on the Be Your Money Hero podcast. We're diving into the nitty-gritty of personal finance and having real conversations about how money, spirituality, psychology, and our life stories all dance together. This podcast is educational, but I'm not a therapist, and my guests and I cannot offer personalized advice through a podcast. My goal is to create a safe place for you to learn and get curious about yourself and expand the way you've thought about money. So if you're ready, let's dive in. Hello, I am really excited. This week's episode is all about credit, and I have Faith Boone. She's the owner of the Credit Yeti, and she's here with us to share her expertise. The Credit Yeti believes in the transformative power of good credit, and their mission is twofold, actually. Is to guide individuals towards better credit scores while nurturing a lasting foundation of credit and financial education. They approach every interaction with empathy and respect, recognizing the challenges that credit can bring. Your journey take precedence, and their unwavering support is here to ease the way. Credit Yeti's passion lies in helping you reach your credit goals, but also ensuring you comprehend how to maintain a robust credit profile that you want to achieve. The owner, Faith Boone, will walk us through some of the credit myths and how they affect you. By the end of this episode, you're going to better understand what credit is, why it is used for, and why it matters. You're also going to learn the truth about common credit myths and walk away with some practical tips that you can look for on your credit report and take away some information that you can use today. So thank you for being with us, Faith. Tell us a little bit more about yourself.
Yeah, sure. Happy to be here. So, obviously, my name is Faith. I've been in the credits industry for about 6, 7 years now. I got into it pretty young. It wasn't ever something that I foresaw myself getting into. I always said, of course, I would never do anything with numbers, and I spoke that into a reality. So, of course, I'm working with numbers these days. Absolutely love it. I would say I'm a credit nerd, and I'm always more than happy to just kind of chat credit.
I have to say, anytime I see a credit related post on social media, your name comes up many, many times. You've also joined me in the workshops that we have done, and you're a tremendous resource and wealth of information. So, thank you again for being here.
Thank
So,
you. Yeah.
start from the beginning. What is credit?
Yeah, so credit is what lenders or banks or someone that you're trying to borrow money from basically look at to judge if you're someone that's a trustworthy borrower. So your credit score generally ranges from about 300 to 850, with 850 being the best. And then your credit report has all of that information to back up that score. So it has all of your past and your current lending along with those payment histories, what the account types are, so that when lenders are looking to lend to you, they can really look and see if they would like to lend to you, if they think you're trustworthy.
So, it's kind of like your reputation that you have for borrowing
Yes.
money. So,
Yes.
what is credit in your credit report used for?
So many things. So, unless you're one of the lucky ones that gets to pay for everything cash, we use it a lot of times for things like homes, business loans, personal loans, stuff like that. But a lot of people don't actually know that employers sometimes like to look at your credit score to see how you're managing your money. Other places such as student loans, stuff like that, rentals, and then your credit score does actually play a small role in your insurance rates. So if you have poor credit, it's not uncommon that those types of people pay significantly more in their insurance premiums.
That really helps us understand kind of why credit matters then. And I'm sure that there's a listener here listening to this information and they want to improve their score. What's one of the first things that they should do?
Look over their credit report. 9 times out of 10, when I talk to someone and I'm walking them through their credit report, the only time they've ever actually looked at their credit report is on something like Credit Karma. That's not a full picture of your credit report, as well as you really need to look at all three bureaus because they don't talk to each other. So it's not uncommon that you'll have different things reporting on different bureaus. So Experian, TransUnion, and Equifax don't always have that same information. So it's super important to get a copy of your full credit report from those bureaus and really take a look through that. Make sure that everything reporting is accurate, is actually yours, nothing is fraudulent, so that you can just become familiar with what is showing on your report currently.
So, where does somebody get a copy of their credit report?
Yeah, so myannualcreditreport.com, you can get it all three of your credit reports free once a year. You can actually get them a couple other times. To start off, that's a great resource. They'll mail you a full copy of all three credit reports. That way you can look through the papers, see what's on there, and it's completely free. So definitely start there.
What specifically should they be looking for on those reports? You had mentioned some errors, but
Mhm.
are there specific things they should be keeping an eye out for?
Yeah, so anything that has a current balance, they want to look at it, make sure they first recognize the account, make sure that the limit showing for that account is accurate, make sure the payment history for that is showing accurate, as well as the balance. It's not too uncommon that credit card companies aren't perfect, so they'll report things inaccurately, or the credit bureaus will report things inaccurately. So you may see a 30-day late from 3 months ago, and you're like, absolutely not, there is no balance. How was I late? So really taking a look at that history is super important. Another thing I like to recommend people look at is inquiries. Anytime someone does a hard pull on your credit report records that, and lenders can see that. Once you get to have too many inquiries, you can look a little bit credit desperate. In places like auto dealerships, for example, you can go there looking to purchase a car, say, I only want you to run my credit one time. They'll swear up and down that they're only going to run your credit once. What that means is they're putting it into their system once, clicking enter once, but that system is going to pull your credit report as many times as it needs in order to get you approved at a monthly payment that they think you'll like. So taking a look through your inquiries, because if you have a ton of inquiries that you didn't approve, that's something that you definitely need to take care of because that is affecting your score a little bit as well.
So, what roles do the credit bureaus play in all of this?
So the credit bureaus are the ones actually collecting this information. So you have your banks, your lenders, Capital One, Bank of America, Chase, Fannie Mae, places like that that are holding these lending. They are actually reporting to the credit bureaus, and the credit bureaus are the ones collecting that information, storing it, and selling it out. So whenever you go apply for something, people can access it.
What are some of your thoughts on debt consolidation and credit repair companies? I know that in my line of work, I get this question a lot. And would you mind sharing your thoughts?
Sure. So debt consolidation companies are not normally my favorite just because they're generally fairly detrimental to your credit because how they normally work. And of course, I can't speak for all of them. I'm not a debt consolidation company, but generally how they work is they'll let your accounts fall into collections and then settle them for you. You can do exactly what they can do, and you don't have to charge yourself a fee. So I'm not typically a fan of them. I normally like to go through the route of trying to get a personal loan to consolidate debt so you have one interest rate, one monthly payment that you're able to make. That way, it's not detrimental to your credit. But of course, I understand not everyone has that option, and sometimes the debt consolidation is going to be the best route for them. And then, as far as credit repair companies go, I think that there's a lot of them that are good. There's a lot of them that are bad. Definitely, look at what state you're in and what they require to open credit repair companies because not all states require a whole lot. So anyone could just open up a company, claim they know something, start giving you advice, and in reality, it's actually going to end up hurting you. So my advice there is do your research on that company. Look at their reviews, look through their website, talk to them if it makes you feel more comfortable. Meet with them in their office so you know it's a real person versus just blindly signing up for something because there are some companies out there that don't have your best interest in what they're trying to do for you.
If somebody is reviewing their credit report and they find that there is an account that they don't recognize, or maybe they weren't late on a payment, how can they correct those errors?
So they can actually correct those errors through disputing. A lot of people like to do this online. I don't recommend doing it online just because it's harder to track online. It's harder to track, when they got it, if it gets deleted, oh, the system glitched, just easily avoidable there. So I personally recommend disputing through the mail, sending it certified. That way you have a receipt of when it was received because someone has to sign for it. And that way, if you don't get a response, you can send the appropriate letter next. But going through the disputing route is my preferred method. For those disputes, they're pretty easy. You just need to make sure you include your name, date of birth, current address. I recommend including the last four of your social. You need to be sending these with proof of identity, proof of address, so they can verify who's actually sending them. And then in that letter, you need to include the account number, the account name, what's wrong with it, and instruction on what you would like them to do with it. So, for example, you have my Capital One account with the account number of showing a 30-day late in February. This is 100% not accurate. I can even provide you with a statement showing that I made my payment on time. I would like this to be updated to show that I made that payment on time immediately. And you can dispute things directly to the credit bureaus, or you can dispute things directly with the creditors.
We will have some template letters and links to all of this information in the show notes below, so you can check that out. There are some financial gurus that say that you don't need credit if you're not going to use debt. Do you agree or disagree?
I would disagree because you don't always need to use your credit for debt. Like I said, there are times when you're going to apply for a job. If it's a high level job, a government job, they want to look at your credit and see that you can spend responsibly. That doesn't necessarily have to do with debt. They just want to make sure that you're responsible. The biggest one being is your insurance rates. If you have no credit or little credit, it's not uncommon that your insurance rates for that home and that auto are going to be significantly higher. They want to make sure that you can pay things on time. If you don't have any proof that you can pay things on time, you're not always going to get the best rate. The other thing being apartments. You could be moving into an apartment just to save, to purchase a home. So, not necessarily anything revolving around debt. But if you have no score, it's not uncommon that those apartment complexes won't want to rent to you because again, they're not positive that you're trustworthy. They may require that you provide them with bank statements or other types of statements to prove just, going the extra mile that you can make these payments. So having a credit score makes this process much easier. So it doesn't always have to do with debt, as well as sometimes debt is unavoidable, especially in the house market these days. Not all of us can afford to pay cash for a home. So it's definitely something that needs to be thought about.
So, on that topic, what are some of the other myths that you see about credit and credit scores?
A lot of the time I see myths on if you don't use a credit card, you should just close it and then it won't hurt you. That's a complete lie, unfortunately. We need to have credit cards on our report. One of the things that goes into your overall credit score is your credit diversity. So lenders like to see that you can pay loans, but they also like to see you can pay credit cards because credit cards are those things where you can rack it up and pay it off every month. If you can rack something up every month, pay it off, makes you look more trustworthy, like you know how to manage your money. Unfortunately, not. One of the biggest thing that goes into your credit score is diversity. Lenders like to see that you can pay different types of the debt. So installment debt being loans that have a end date, they have a monthly set payment and a payoff date versus a credit card that you can rack up and pay it off every month. Being able to show that you can responsibly manage both, you know how to move around your money responsibly really helps your credit score, as well as whenever you close that credit card, you're closing out an account. So you're losing out on history, you're losing out on that diversity, and you could be deleting some payment history by accident. All these things together can drop your score anywhere from 20 to 45 plus points per card you close. So for those types of things, I recommend, for the love of all that's holy in this world, don't close the credit card, just leave it open. If you don't want to use it, don't use it, but just leave it open, don't close it. Another common myth that I think that I hear pretty often is that when you have credit cards, you need to hold a small balance on it every month. I tend to disagree. Your credit report is not necessarily reporting the payment cost that you have paid. So if you paid $20, the balance is going to show $20 lower, but it's not going to show that you made a $20 payment every month. Even if you don't make a payment that month because there's no balance, your credit report is still going to show that you paid it on time. So you do not need to hold a balance on your credit cards. You don't have to use them every month. I generally recommend using your credit cards a minimum 4 times a year to make sure they're not closed, but you do not have to hold a balance and make small payments on it. You could literally buy a candy bar once a month and pay it off. Does essentially the same thing. Those are two big ones I hear though. Oh, another one I hear pretty often when it comes to home loans is my credit is great, but my husband's credit is crappy, but that's okay. I have good credit, so I know we'll get a good rate. That one is tricky. You really need to look at the lending requirements in your state because I know for the state of Colorado, we're going to be going off the median score of whoever has the lowest. So if you've got a 700 score, your husband has a 600 score, you're going to be getting that interest rate based off the 600, not the 700. So It's important to make sure that you and your partner both have similar credit scores that are both decent. Otherwise, when it comes to lending, getting joint accounts, and again, back to that insurance thing, it's not uncommon that the person with the lower score is going to drag you down and get the crappy interest rates or crappy premiums. So it's definitely important to make sure that your partner also has a positive credit score, not just one of you.
What actions hurt your credit?
The biggest thing that's going to hurt your credit is not paying things on time. The single thing that most affects your credit is your payment history. That's about 35% on the FICO scoring model is your payment history. That's the biggest thing. So anytime you can't pay something late and it goes 30 days late, the higher your score is, the lower you're going to see yourself drop, the more points you're going to lose. So making your payments on time, super important. And something I recommend there that a lot of people don't realize is if you're having a rough month, you lost your job, whatever it might be, if you know you're going to have to pay your auto loan late, if you call, a lot of the time these companies are willing to skip a month for you, delay your payment. A lot of them are willing to work with you because they would rather get paid than not get paid. So if you just call, a lot of the times they're willing to work with you, worth a shot. So definitely making payments late, something I see all the time. It's super important to make your payments on time. And another thing is your debt utilization. Two things go into your overall credit score when it comes to your credit card utilization. Each individual card's credit card utilization and your overall credit utilization. So I generally say when it comes to credit cards, you want to keep your balance at about 20 to 30% of that limit. Once you start to increase that, that's when you're going to start to see your scores be reflecting negatively. So you're going to see them drop. The nice thing with credit cards is once you pay that balance off, you'll see your scores bounce back up, but it can take 30 to 45 to 60 days to see your scores react because of the delay. Credit bureaus are generally super fast to report negatives, but they're not always the quickest in reporting those positives. So watching your credit card balance is super important. I know it's not uncommon for someone with a $5,000 maxed out card to pay it off and see their scores bump up 30 points. That would be pretty typical. So those are the two biggest things that are going to be affecting your score.
Can divorce hurt your credit score?
A lot of the times with people with joint bank accounts, they also have joint auto loans, joint credit cards, all those types of joint accounts. When you're going through divorce, you have to separate all that. So you're either going to have to be closing the accounts, you're going to have to be refinancing things into one of the other person's name, or you can keep the account open until it's paid off. But one thing that people don't realize is these creditors and lenders, they could care less if you have a divorce decree that says that the other person is in charge of paying this account. If both of your names are on that account, legally you are still liable, and the creditor, lender, is still going to come after both you and the other person until that money is collected. A lot of people think that just because they have a paper that says one of them has to pay it, that that means they're good to go. It doesn't. Your credit doesn't work that way. Um, Another thing is, like I mentioned earlier, closing those accounts can hurt your credit. So if you have to close these credit cards, you really need to think about what we can do to kind of counteract that so we don't see such a large decrease in scores. Otherwise, you close, 4 credit cards, you could see yourself drop 50 to 100 points, especially for those people that need to go and buy a new home right after the, divorce. That's not always ideal. Another thing is in the messy divorces, I've seen a few times where the other person will take your social and start applying for things under your name, trying to get debt out so that before you get to the settlement type stuff, you'll have more debt to have to settle and they'll get more. Keeping an eye on what's going on as far as inquiries and opening accounts goes, also super important. And then another thing is just a lot of times people will get, settlements, they'll get a large sum of money. They'll have some debt they have to pay off and they have to figure out how to delegate that out to those cards. So let's say someone's got $10,000 across 3 credit cards and they got a $5,000 lump sum. They're trying to figure out how to pay that. They might think I'll pay off one card, that'll be most beneficial. It might not. So they might not see the increase in the scores they want because they haven't delegated the money out correctly. So that goes back to if they need to use their credit fairly soon after that divorce, they're going to see their scores sitting lower. So they're either going to get denied, get higher interest, whatever that looks like for them.
Are there things that people can do maybe in preparation of that to help protect themselves from any
Mm-hmm.
of those downfalls?
Yes. So, one thing they can do is they could freeze their credit reports. This just means that if someone tries to pool their credit, they'll immediately be denied because the reports are frozen. So, when they're ready to go apply for something, they can just unfreeze it, apply for what they need to, and then refreeze it. That ensures that no one's going to be taking your information and applying things for you. They can ideally start thinking about how they're going to delegate money out. So if they know they're going to end up getting a large lump sum of money, where are we going to put that? The thing that I would say the biggest thing they could do to prepare for this is just talk to a credit specialist, get their opinion on these are the accounts I have, these are what I think is going to close, this is what I think is going to be moved. How do we go about that? Because this isn't something that's commonly talked about or something that you can easily Google and get, this is the best answer, do this, so really talking to an expert and making a plan ahead of time is awesome versus just kind of trying to wing it.
So let's just take a fictional character. They have made some late payments. They've struggled in the past. Their credit and the report is really reflecting that. They're ready to get back on track. They've got a stable job now. They want to be able to buy a house in the future. We know that the first step is to pull that credit report and start looking for any errors or discrepancies that might be on the report. What's the next step?
The next step is typically going to be taking a look at their debt and what accounts they still have open with balances. So if they have collections, for example, that's when they're going to want to say, okay, do we need to settle some of these? Do we need to get paid for deletes, take care of some of this debt so their overall debt is going to be lowered, see if we can get some of those negatives removed. The next thing is going to be making sure they're getting caught up on payments. So if they have open accounts that aren't in collections that they've made late payments on, from this moment forward, they need to start making those payments on time so that it looks like from now until the next 6 months they've gotten their stuff together, they're more trustworthy. Another thing that a lot of people don't realize they can do is if they've only had a couple late payments on a credit card or a loan that's still open, they can call and ask for a goodwill deletion. Essentially what that means is calling up the creditor, the lender, saying, hey, I am so sorry that I made this late, this is what was going on, my life's back on track. I tried my hardest to get this caught up. It's caught up. I promise I won't be late again. Could you please remove that 30-day late or those few 30-day lates? I normally say it's a 50-50 shot, but it's worth a chance. It's worth a quick phone call because a lot of the time I do see that these people are willing to remove these lates for you, or at the very least take off some late payment fees and stuff to help you out whenever you're trying to get caught up. And then again, talking to a specialist also never hurts, making a game plan.
How long does it take to repair credit?
That is super dependent on obviously the depth of their situation. Generally, I say about anywhere from 4 to 12 months is probably a good time range. If it's taking more than 12 months, likely something's not getting done correctly. Or if it's taking more than that, that could be someone who, for example, maybe just filed bankruptcy and it just discharged, so they need a little bit of extra time. But I would say probably about 4 to 12 months is a good range if they're really committed and working through all the motions.
How can the Credit Yeti help someone who's working to repair their credit?
Great question. So, on our end, we're not only, helping our clients or just completing tasks for our clients on their behalf. We're also going to be walking them through what we're doing, how we're doing it, and why we're doing it. Our overall goal is to get our clients to their goal, but to make sure that by the time they leave our hands, they have a clear, confident understanding of credit, their credit report, and then if something were to happen to them in the future, they feel confident and comfortable handling the situation themselves versus feeling like they have to pay someone or they have to Google it or they have to just deal with the crappy interest. So we're not only here to do it for them, we're here to walk them through it. So in the future, if needed, they could do it themselves.
And where can people find you?
They can find us at credityeti.com or they could find us at our Instagram or our Facebook, also Credit Yeti. Yeti spelled with two T's. On our website, you can fill out a submission form for us to contact you. It has our phone numbers listed so you could reach out directly, or it has our Calendly links where you could just get on our calendars, book a consultation right then and there. Our consultations are completely free. We're more than happy to chat. We're even more than happy to take a look at your credit report with you, give you a couple tips on some things that might be good starters for you to start seeing some improvement.
We'll have some resources in the show notes. We'll have all of the links on how to get in touch with Faith, where you can get your credit report, and then we'll also have some templates for requesting corrections of errors. And Faith, as we move into some of these closing questions that I ask at the end of every show, what does abundance mean to you?
Great question. I think to me, abundance means having a little bit more than enough, whether that's financial wise, family wise, faith wise, just being comfortable a little bit over. So having maybe not everything, but I'm comfortable, I'm confident, I'm happy, and I have some things around me that maybe make me a little extra happy.
And then the second question is, what is some of the best advice you've ever received?
Hmm. If you don't do it, someone else will, so you might as well try.
Thank you so much, Faith, for coming on the show. I'm excited to have some resources for our listeners because credit is just one of those things can feel a little bit overwhelming. And so I hope that the listeners have a place that they can go. Step one, get your credit report and take a look at it. So thank you, Faith. Is there anything else that you'd like to leave us with before we end the show?
No, thanks for having me, Stephanie. It was great chatting. And yeah, if you or any of our listeners have any questions, feel free to reach out. Like I said, I'm always more than happy to chat credit.
Thank you, Faith. As we wrap up this episode of Be Your Money Hero, remember that your financial journey is a path of self discovery. If you have questions that you would like answered on the show, please submit them to info@beyourmoneyhero.com. If today's conversation resonated with you, share your thoughts and insights with our growing community. Subscribe for more empowering discussions, and always remember, you have the power to be your money hero. Until next time.